10 assets you must have to become rich. Investing is never easy. Everyone wants to see their money grow with the lowest possible risk and the highest possible rewards. But nevertheless, many of us continue to adhere to the conventional notion of savings. Although saving money is a good thing, investing it is preferable. Saving money is a sensible idea, but investing in assets is wiser. As savings accounts and low interest rates are not inflation adjusted, holding or saving cash over the long term may prove to be a liability. As a result, both the value and purchasing power of your money diminishes over time. The following 10 assets are preferable to become rich. 1. Real estate and land. Many people will offer you free advice on investing once you start making money. Property investments will be at the top of the list. Although it is a great concept, it could be difficult to shoulder the burden of monthly EMIs in the beginning of your profession. Consult with a few property advisors to learn about pulling in opportunities. Several people pull their minor financial contributions to buy a fairly priced piece of real estate or land and split the profit. Profit can be divided among the investors in proportion to their percentage of investment by renting it out or selling it at a time when the market is booming. This is a great place to start if you want to invest in real estate or land. Note that agricultural land may be slightly less expensive than commercial land, and renting it out could result in long-term gains. 2. Stocks, bonds, and index funds. Stocks are undoubtedly one of the best ways to invest. Buying shares in a reputable company or a budding new one can turn out to be very valuable in the long run. The investment growth is based on how well the business performs and how much it contributes to the relevant economy. Bonds are a reliable way to protect your savings. Although while the returns aren't as great as those from stocks or other types of investments, they are still sustainably higher than those from banks, and as a result, they are able to take growth inflation into account. While you don't have much time to investigate the particular performance of a firm and watch their return history, index funds are your best options. Index funds are a collection of the top performing securities on that index and are therefore optimized for performance. The next best shares in line will take the place of any shares that aren't performing to the required level right away. As a result, your investment is always working in your favor, solely depending on the market. Before we go on, if you are new to this channel, kindly click the subscribe button below for more content like this. 3. Foreign currencies. The US dollar is among the international currencies that are most commonly used around the globe. Nonetheless, depending on the country's commerce and overall economy, this major currency is vulnerable to significant volatility. In addition, the variation caused by the pricing of commodities are also affected by the state of the world's economy. In such circumstances, it is preferable to invest in currencies that experience less swings and lower rates of inflation. Euro and Swiss francs are two examples. It takes some investigation to invest in a foreign currency. Choose your currency wisely based on the economic, political, and speculative climate of the nation to which it belongs to. 4. Precious metal and gemstones. For investors who want to protect their funds and allow long-term growth, gold and silver has long been a popular option. Considering the demand and supply curve, the supply of these precious metal only increases with time. As a result, this is a possibility that should never be discounted. However, there are other minerals available, such as platinum and rhodium, which are more expensive due to their scarcity. In addition, investing in gemstones is a more ethical option than keeping your money in savings. Among the gemstones that are frequently purchased and show a reasonable increase in value over time are sapphires, rubies, emerald, and diamonds. 5. Luxury items. We've all seen our favorite celebs leave airports with luxury bags and wearing exquisite timepieces. They don't actually intend to flaunt their money, at least not in a controversial sense. Investments are made with these luxuries. The rarity gives them worth. The resale value of the product will only rise because premium labels don't create items in bulk, even in 10 years. Luxury bags and watches in particular are excellent real-world investments and have thus entered our list. 6. Art. Of course, not all art sells well. The worth of an artwork is increased by being aware of the background history or narrative and how it spread. Purchasing art is not for the timid. Whether it be painting, murals, handcraft, or a piece of history or culture. But it can be acquired through a pooling of resources, just like land and real estate. Be sure to know what you are investing into because it is a long-term investment. 7. Vintage cars. For individuals who are aware of which motor do not lose value over time, this is an option. Motorized vehicles typically represent a liability because they lose value over time and need money to maintain. But the correct kind, vintage, are in fact advantageous. Once you've gained some investment knowledge, you should consider investing in classic cars that are no longer produced or have a well-known backstory. Finally, raw materials and commodities. The commodities market and stock market are similar. For any novice investor, learning how to choose the best commodity to invest in would be a game changer. For instance, steel is the raw material for several projects around the world and will therefore consistently be in demand and supply in the global economy. Parallel to this, given their sustainable use in the logistics and shipping of the majority of items globally, oil and natural gas have their own means of regulating the price of many products. Your investment portfolio will be heavily influenced by your knowledge of commodities and market operations. Although it is recommended to save for the short term, this should only be done to cover emergency money or immediate cost. Why not put the rest of your money to work for you? The greatest flexibility is found in earning money while you sleep, and doing so is made feasible by creating the ideal investment portfolio. Thank you for watching. If this video has added value to you, kindly click the subscribe button below as we consistently create useful content to help you grow financially and be a better person.